President Trump is expected to announce tariffs on all steel and aluminum imports today. He's also expected to announce reciprocal tariffs on countries that tax U.S. imports later this week. But for the impact on the U.S. and the global economy, let's bring Morgan Stanley chief global economist Seth Carpenter. Seth, it's great to have you on. Let's start right there, because in a week where we've got Powell on the Hill with Humphrey Hawkins' testimony, we get fresh inflation data, and we know that matters to the Fed. We get retail sales, we get earnings. We also get, and it would seem this is really driving the narrative, more perhaps tariffs and trade-related news from President Trump. How are you gaming this out, and how are you modeling for your economic forecasts this year, given the fiscal piece of the equation?
No, absolutely. There's a lot of moving parts, to say the very least. Look, what we've tried to do is try to look through a little bit all the noise to find the signal here, and we've made some baseline assumptions. President Trump, when he was president before, put tariffs on China in particular, spent a lot of time talking about tariffs on other countries, but eventually primarily put tariffs on China. And we think he's following through there. We saw the 10% additional tariffs recently. We think that keeps going. For the rest of it, take what happened with Canada and Mexico. It seemed to be part of a broader negotiating package. I don't think anyone but the president himself can say for sure what's likely to happen. But our assumption has been that a lot of the tariffs are going to be part of a broader negotiation. It's mostly the China tariffs that are going to stick.
I want to just take a step back and ask what is perhaps a very basic question. But when you look at all of our major trading partners, and in many cases allies, the U.S., trade deficits, all of them. China, the obvious one, but also Mexico, Canada, the European Union. I could just go down the list here. Why do we have such large deficits with all of our major trading partners? How much of this is really just the fact that this is a services-based economy and we're not making enough things to export to other countries versus the possibility that those countries aren't taking many of our goods because they have tariffs, duties, and in some cases outright bans on those goods from the U.S.?
So it's a great set of questions. And I think on a real fundamental level, what most macroeconomists would tell you is that a country ends up having a trade deficit like we do with so many other, because on average, the country is spending more than its savings. There's a bit of an imbalance in there. One of the key deficits is our federal deficit, for example. So the government is spending a lot more, borrowing a lot more than what the country is able to produce. The country is just buying, and we're importing a lot of that. That's nothing new. That's been going on in the United States for a very, very long time now. I don't think you can look at a trade deficit, particularly a bilateral trade deficit, and infer that somehow there's something nefarious going on the other side.